And welcome to Streamlining Insurance, brought to you by the Risk and Insurance Education Alliance, providing a practical advantage at every career stage. I'm your host, Darren Bloomfield, the insurance guy at Feathery.
So, Rahul Daryanani. I work for a firm called Cerity Partners Ventures. At our core, Cerity Partners Ventures, part of a larger RIA by the name of Cerity Partners. But at the Cerity Partners Ventures level, we work with large corporations, public, private, typically Fortune 500 and larger, to help set up, manage, and execute their internal corporate venture capital funds alongside that corporation. And so, as a practice, or doing this job, we've been around for about 11 years. Work with over 20 different corporations. These are folks like Kellogg's, T-Mobile, Erie Insurance in the insurance space, so on and so forth. There's a corporate partner and a fund in every sector of the economy, sometimes multiple per sector. And the whole idea is taking venture capital expertise and blending that with the subject matter expertise and the industry expertise and knowledge that a lot of these corporates bring. And ideally, that combination allows for mutual benefit creation to both sides.
Yeah, definitely. And specifically kind of in the insurance space, whether it be like say a broker or a carrier, kind of the VC approach, and this type of fund, this type of like innovation focused fund of can you describe like what are you trying to accomplish as like the VC operator, and what is the goal of these insurance companies?
Sure. And I mean, I won't speak for all insurance companies broadly, but typically when we do work with our corporate partners, what you're typically noticing is that, like many other highly successful corporations, these corporations that we work with have strategic goals. They have a plan. There's something that they're trying to execute against, and every company wants to be innovative, but not every company has access to the venture market, has access to the startups that are building new and exciting things, has access to that network. And so, like I said, we bring in the venture capital expertise, marry that with the industry expertise, and ideally, what you get is a innovation initiative that helps that corporations achieve their strategic goals. And along the way, we're also making financially sound investments, right? Because it's not strategic to lose money, but there's no corporation that's doing this for the financial gain. Or I won't, actually, I won't speak in absolutes, but most corporations likely aren't doing this for purely the financial gain, right? They're doing this because, hey, that new startup or this new partnership could mean a new revenue line, a new product stream, cost efficiencies later on down the line, and it's that ROI within the business that actually drives value.
Yeah, definitely. I mean, at the end of the day, these corporate partners have investors, whether they're publicly traded or private or however else they're held, and not in the business of losing money. So there's only so much funds that can be set aside to like advancing technology, to AI, to automation, or whatever other like promising use case that startups are creating and creating those solutions for. But the ROI isn't always just measured in like dollars and cents, right? Like sometimes it's kind of harder to track, say like for a carrier, like a tool that can now clear like submissions faster and help them get quotes out faster. Like that is not a direct like, oh, we invested this amount of money and now it like 2x and it's worth this. Like that might be harder to measure as far as like the operational impact of how did the business unit perform and how have the underwriters became more productive. So how do you kind of like measure something like that?
Yeah, it's an interesting point. And so I think, when we think about ROI broadly, especially with all of our corporate partners, but let's use insurance or financial services in this case. It's multifold, right? And so it's, hey, if this is an efficiency tool, are there cost savings? Are we reducing lead time or throughput, or are we improving overall time to value? Is there some way to recognize and quantify that value, whether it's operational efficiencies or what have you? But beyond that, 100%. I mean, there's also value creation from, are we serving our customers better? Are we serving our agents better? If it's an agent efficiency tool, do they, and you're the carrier, do they prefer to work with us because we offer this suite of solutions, right? If you're an agent with whatever, whatever carrier, you have access to XYZ components. And so it's there are a lot of different streams for value creation. I do think you need to be able to quantify it to justify the cost at a certain point. So when leadership comes back and says, okay, well, we're spending, whatever ACV for all of these solutions, where is the value? Right. So at a minimum, I think that, does the value you've created and the timeline you've created cover the cost of the solution? Then beyond that, all of the knock-on benefits, are important as well. So anytime that we enter a venture investment, a commercial relationship, or, we work with our corporate partners to find other startups or partners to work with, you're thinking about what does success look like, and you're setting that up on day one.
Yeah, definitely. Because you need to know where the goalposts are. You need to know how, not only like your fund is being evaluated, but also like you want to best understand your client just in general. Because like you obviously want, your client to be successful. So just on the note of say like workflow transformation of kind of like bridging that gap, being a connector between like these innovative startups that are like on the front lines, filling that need, sensing like that pain point in the industry. How do you go about like evaluating the startups? Because I think either the corporate partner, the insurance company could invest in say the startup, or they could just contract them to use like their tool.
It's a good question. So again, especially on the corporate venture side, there are a lot of different streams. It's multi-tenant, and so if we're taking a look at a company, is this strategic for the corporate partner, right? So we'll work with our corporations to figure out, hey, what matters to you, right? What keeps you up at night as a business leader within the organization? And that what keeps you up at night question will forever change. And so a big part of what helps us be successful is staying in touch with the leaders of the organization, so that as business goals change, as strategic priorities change, we're aware of them and can source companies, use our network to source companies effectively. Once we have a company in, it's really the first look is, does this align with something that we've heard, some kind of strategic need, right? And then we'll go and we'll take a first call with the founder, start to run it through the venture process and say, okay, well, do we like the growth? Do the financials make sense? How do we think about the fundamentals of the business, right? Because at the end of the day, back to my first comment, it's not strategic to lose money. However, it doesn't necessarily mean that we need to always have a commercial deal with every company we invest in, and or we need to invest to be able to introduce something to Erie or any other corporate partner. And so the idea is that, hey, if this is a great commercial deal, but it's too early, too late, not a fit for the fund for some reason, but we do think it aligns with a need that the corporate has mentioned to us, then great. We'll suggest it up commercially, and we have a process for that and a flow with that. With most of our corporate partners, we'll typically be involved in the discussion as well. If it also happens to be a good investment candidate and, financials make sense, fundamentals make sense, there's a proven go-to-market motion, it falls within the mandate of the fund, we'll take, and there's a round, obviously, we'll take a look at the deal as well. And the best case is where you get both, but by no means is it necessary, because on both ends, we want to make sure that we're able to move, at venture pace, ideally, for both the startups benefit and the corporations, but then also not have to tie them so closely together.
Yeah, definitely, that makes sense. And just kind of thinking about your career so far in that role is in the last 5 years or so, say like COVID to like whole like AI automation kind of boom. I mean, obviously, kind of still in a boom with that right now, but at first, just kind of like the buzzword of like AI, like, and then like how, because I'm sure like executives were reaching out to you and they were like, hey, like, what should we do with AI, or like just kind of like very general like broad questions like that. Like, can you kind of describe like those stories and interactions, and what's kind of your role as the VC, kind of the, if you say like advisor, kind of consultant role in a way as well? How do you like, what's your job to like stay on top of that trend?
Yeah, no, it's a good question. I'll answer it slightly differently. Um, the goal of venture, especially on the corporate side, is to help corporations see around corners, right? Ideally, the venture function, the innovation function ends up being the headlights for the business. And so it's less about what's directly in front of me. It's what do I need to watch out for, coming my way, coming down the pipe. Um, and so with that in mind, you're right. It is our job to stay ahead of trends and know, all of the startups if we can in a certain space and understand any regulation that's coming down and use all of that to build a thesis. That's just traditional venture. You apply it into the corporate space. It's okay. How does this make sense given everything I know? How does this work for the corporation that I'm, executing this fund for? And can I, what can I do to better equip them to see around corners? To what can I do to be the headlights for the business? And so it's something like AI. AI comes out very commoditized at this point. Probably more commoditization to go. But you think about financial services and the use of PII or personally identifiable information, and all of a sudden there are potentially employees within the corporation plugging things that they shouldn't be into ChatGPT, or uploading documents that they shouldn't be into other open sourced LLMs and prompting things that they shouldn't be doing. And so what we actually saw were a lot of corporations putting a moratorium on anything AI based, right? And that ends up going against innovation because it's not even just generative. Anything with AI, there was a moratorium on it for a short period of time while IT compliance, the business leaders, everyone got up to speed with, okay, what are we looking at? And over time, you've seen that unwind a bit as folks have gotten more familiar with it, have been able to put guardrails around it, have established centers of excellence to govern it, let's say. Our role largely, and what we saw a lot of the time, was across our corporate partners that we work with, kind of saying, hey, can we have a discussion about this? What do you know about it? What have you seen in the space? And again, AI is not new. And so at that point, we were able to, we do these things called deep dives and sector summits where we'll go really deep into a space and a subsector within the industry that we work within for our corporate partner. And so we saw a lot of those requests coming in where, hey, just educate us, right? And so a lot of the flow was, okay, well, we've been tracking these companies for a while. This is the difference between, AI, generative AI, RPA. These are the security concerns we've seen. These are the startups tackling different parts of the value chain. Of the 100 startups that we've spoken to, these are the 3 or 4 that we recommend. They're SOC 2 Type 2 compliant. They have it's dual encrypted both at transit and at rest. There are they have venture backing. They're more mature than, let's say, the seed stage startup that somebody in claims is using all of a sudden. And so there was just a lot of iteration, and it didn't immediately flip the decision overnight, but over time you get to a place where you gain comfort, you gain knowledge, and you're able to actually go and take part in the innovation.
Yeah, no, I think that's a great way to put it as far as like seeing around corners, like for these larger companies, because I mean in general, like these larger companies tend to be tried and true and maybe slower moving to their fault, but they're also like very good at what they do. That's why they're so big and they're around so long. So if they dedicate a portion of their workforce, a portion of their resources to VC and uh, other people to like help bridge that gap. Like I think that's a great way to put it, and I think that's just interesting with like automation in general. Is as you said, is like all industries were being disrupted at the same time. Like it wasn't just insurance or this or that, but it's also like you have to have these groups, these people, as you said, like centers of excellence, both like internally and externally to be able to like come in and specify and tailor like how is this going to impact you or your industry versus like this is what AI automation does like holistically is not helpful.
No, 100%. And again, the beauty of venture is it's not M&A. You're not purchasing a company, committing to it, integrating in that way. There is a commitment, but it's different, especially on the corporate side. It's, hey, let's make an investment. Let's be a part of the innovation, but let's learn, right? And so, what does a corporation get out of it? At a minimum, learnings and insights, right? Ideally, there's other ROI like we spoke about earlier. But then, what does a corporation provide the startup? expertise. There's insight, their own level of insights into, hey, if we've been around for 100 years, there's a reason for that, right? We might know something about insurance. And so that blend, typically when it comes together and it works, that's when you see venture work the best.
Yeah, definitely. And can you kind of touch on, as I know you spent an earlier part of your career and more so like the internal at say like a carrier, really like investing like the funds, like the premium, the surplus reserves before an actual return. I just want to make like a clear differentiation between like that side of the business and then like the funds that obviously a smaller portion of funds are dedicated to like the VC innovation kind of space.
Yeah. So I mean, let's say in the context of insurance, because I think you see this a lot within insurance companies. I started my career investing for the general account, right? So investing the surplus where you're really matching, or you're hitting a certain target as it relates to claims and having a certain amount of reserves and things like that. And so at that point, it is much more financially driven, right? There may be thematic things where you avoid certain industries or there's certain sectors that you may like, but largely it's more of an asset management function. On the venture side, when it's corporate venture, when it's the way that CPV, Charity Partners Ventures, does it, it's really, again, it's going to accelerate the strategic vision, strategic goals of the business, right? So it's more of a corporate development innovation type tool. And so, like I said, it's not that financial performance doesn't matter. It certainly does, but it's not the end all be all, at least for the corporation.
Yeah, definitely. And what's kind of the conversations internally ever of say like a buy versus build kind of debate of like say like if I have this fund or this money set aside to innovate, why not try to build this tool like internally versus go invest or, contract a third party, say startup to, come in and help with that.
So this will be controversial, but the simple answer is because it'll take too long, it'll cost too much, and chances are you don't have the same level of internal talent if you're a corporation, right? Um, and I likely could have been a bit nicer about it, but that's the hard truth. And so typically, if you go out to build and you think about legacy IT infrastructure at the corporation, IT resources, the process that you may need to follow to launch a new idea, get the funding internally for it, the build outs, the compliance, all that kind of stuff, market testing, chances are your lead time is 12, 18, 24 months. By the time you're out to market or ready to deploy the tool internally, innovations change. There's new technology out there, and you're kind of forever on the back foot unless you're willing to pay engineers and the like what they could get at a high performing startup or Silicon Valley or whatever it is to come in and build it, and you're willing to also provide them the flexibility, the workflows to be able to do that efficiently, right? And to create that super nimble function within a larger organization is very difficult, and that's why you partner. It doesn't mean that you outsource everything to a startup or a series of startups, but there are portions of the solution that you can partner with startups for. You can probably build your own logic or tweak it to match what you need at the corporate level. And so, maybe you build a portion of it, but you partner for the rest of it because someone's already done the hard work. They've already done the market testing. They've already done the go-to-market work. They've already built the solution. They've already brought it through beta. They've already started to perfect it. They've already put millions of dollars of VC capital typically into it. Why not partner? And again, at a minimum, get the learnings and insights. See if you like it. See if it works. I'm not advocating for taking an idea and running with it on your own, but that it's the best way to test a concept.
Yeah, definitely. I think I like the way you said that as far as like when an idea is say like hot, like oh like the AI automation, whatever, streamlining process, digital transformation, like right now, those tools and ideas are like hot. So like if you are like the large company now that's like just kind of catching on to that, and then you're like, hey, let's go try to do it internally, but then like if the large you would think like if a large corporation's just hearing about it now today and maybe some other people in that company were very tech savvy and more technologically advanced on an individual level, and they might kind of know what's going on. But then there's whole companies and teams, 12 months, 24 months ago that started developing this product, and then it's like ready to go when it's hot. And then if you like just figure out it's hot and then you try to build from there, like you missed a curve, really. Yeah.
Market moves on. I also think that we saw this within let's call it insurtech 1.0 wave into, you could argue there was a 2.0 wave and now we're on to something else. But I think across venture innovation broadly, I think in many cases the conversation has gone from disruption to enabling or enablement, right? And so if you're the startup, positioning yourself less as, hey, incumbent, I'm going to destroy your business, like I'm the hottest thing in town. Obviously, I'm going to build it internally then, right? I don't want to partner. But if it's, hey, I'm going to accelerate what you're trying to do. I'm going to get you to where you need to go faster. I'm going to make data quality easier, data cleanup easier, querying data easier, all that kind of stuff. I'm going to make your workforce more efficient. I'm not trying to kick you out of the market. Then partnering becomes less of an issue.
Yeah, yeah, and I think it's just kind of the what do you say? Maybe like vibe of like that tool. Like if I work at a large company and I'm evaluating a tool, and it seems like that startup is like positioning themselves in a way that's gonna like take or like interfere with my job, and that's like their value add. Like, why on earth would I try to bring them in the door?
Yeah,
Like,
no, 100%. And that's, I think it's a good point. So I think you see that workflow within enterprise software broadly, where it's, hey, I am an enterprise tool. I'm here to help you enterprise do your work better. That's great. But the person making the buying decision within the enterprise, yeah, if they feel like, this is going to threaten their job, that's something that you start to run into. I also think that there's, I guess, some reality that needs to be realized on both ends. One, on the startup side, maybe don't pitch your main ROI as we're going to help you cut all your people, right? Maybe there's other, like, yes, headcount reduction is probably a byproduct of some of it, but I also know corporations that haven't reduced headcount. They've upskilled their existing team. They've allowed their team to step up into other roles, while, let's say, an AI solution took over some of the more manual and repetitive tasks. So there's a way to pitch ROI other than you can fire half your staff. On the corporate side, it's understanding that exact thing as well. This is going to help me do my job better. It may allow me to be upskilled. If everyone that is in a kind of a purchasing decision seat is threatened by bringing a tool in, then again, that starts to hamstring innovation.
yeah, definitely. I think that's something on a note of like market like branding or like product placement as like the startup with, say, like a feathery example is like, hey, like we partner with brokers and carriers to make them more efficient because they're using AI automation to cut out the mundane parts of their job.
Right. You're not taking away the agent's role in selling insurance, right? You're not taking away the relationship. You're not getting in between the agent and the client. You're just helping them do their job better.
Definitely. And just any your recent trends, we're just kind of curious what you've seen of where you think there are still like gaps or, say, like underserved opportunities like in insurance that either like you yourself are just kind of hoping that a company comes in and creates a solution for this, or say you're kind of hearing uh kind of hearing companies asking, like these large companies asking for a tool that does XYZ.
Yeah, it's a good question. It's probably a whole separate call if we go through the entire list, but or a whole separate session rather. But the quick hits would be compliance and data security as one. So as you see, AI being leveraged more and more throughout the stack, whether it's for marketing, other content creation on the insurance side, there's a whole motion around claim settlement from a legal standpoint. And then there's always been, underwriting and claims workflow. So as this extends throughout the org with an insurance or a bank, and you start touching more private, more PII, making sure that marketing content is created within compliance, both from a regulatory standpoint, but also within the guidelines of the company, internal guidelines, making sure that workflows make sense, making sure that as you automate more, you're not running into any kind of compliance risk, again, whether internal compliance or regulatory compliance. That's something that we're watching for. There are startups that are starting to tackle this. So I think it's a space to watch. It's something that we're looking at actively. I think continued workflow automation, workflow automation will probably continue to be a sector for us broadly. So I think within some industries, it's okay to be more general. I think within certain insurance, other financial services, there are cases where you need more verticalized solutions. And so thinking about those companies that aren't building a point solution, but are really building more of a platform, not to be cliche, but it needs to be more than a feature. It actually needs to be a full product. That's something where I think there's probably still space for innovation or new winners to come up. And you're seeing it across different things. I think that there is a lot of saturation, a lot of noise in the market right now. A lot of companies building point solutions and a lot of glitter, but it's, I think the beauty of being in our seat is we get to go to the corporate partner and say, hey, would you use this? Right? Like, does this make sense? And go to 5 other carriers and ask them. And a lot of times what you see is that the answer is no. Right. And so you may get that 0 to, call it, 3 million in ARR motion. What about 3 to 10? What about 10 to 100? Right? Where does that staying power come from? And so as we look at automation tools, it's, is there insurance expertise on the team? Is the product built for insurance or financial services? It can't be RPA at this point. If you're putting in it can't be RPA with an AI tag on it. And similarly, it can't just be, agentic for the sake of it, right? There needs to actually be some logic on, hey, this is how we're connecting workflows. These are the types of tasks we're taking. This is where we've chosen to play. This is how we expand. And so just a more full-fledged solution, I think, is helpful. And then me personally, I've always loved payments, payroll, the more fintech side of things. I don't know that there is a great solution in market today for insurance payments broadly. And so just on the B2B payment side, thinking about that. And then beyond that, one thing that we're always looking for on our end is, how do we better serve the end customer, right? And so, what value-added services can we add on to policies or products for policyholders? What can we do for agents? What can we do in either very core ways or more abstract transformational ways that, again, at the end of the day, just deliver a higher level of service to the end policyholder? And so that could be new products, could be new methods of reinsurance. It could be, back-end automation and workflows that allow for better servicing times, call center automation, things like that. It could be payments. And so that ends up broadening the scope quite a bit, but the guiding light is better service for the policyholder.
Yeah, definitely. I mean, I think that would be cool. Yeah, like investing resources for like how do we make the insurance buying process better for the actual insured, for the end user. Yeah,
Yeah, I mean, there's been this push around alternative data for underwriting for forever, and thinking about, okay, well, can we, with better data or alternative data that we work into the underwriting equation, can we more accurately price? Can we get to more bespoke underwriting on an individual by individual basis or company by company basis? And some companies have done it. I think there's more wood to chop. Arguably you'll always run into state and federal regs on what you can actually use in underwriting, depending on the product you're selling. But continuing to just hone in those models, whether it's auto, home, life, etc., to say, hey, I'm pricing your risk individually in an efficient way, and we're running it through these workflows. I think there's still wood to chop.
yeah, definitely. And as we wrap up here, just kind of wanted to spend a minute on just kind of like advice for, say, like an early stage like founder trying to break into like this AI automation space, like in insurance. I like what you said earlier of like the VC can almost be like a sounding board for if you get a couple $1 million in ARR, okay, that's great, but like, are you actually going to scale? And I'm sure like that would really stink for a founder to hear from you, like, hey, like this isn't going to work, and I've talked to carriers, and you actually don't have product market fit with like the big boys here, right? Like, I'm sure that would really stink to hear, but like they would probably appreciate it, and then you can help them pivot or kind of add a new tool or a new product solution. Can you just kind of talk about that as far as like, obviously there's two-sided here. Like the startups have to make a name for themselves, or have brand presence and like become known in a way. But then the VCs also have to go out and like look for them as well.
Yeah, it's a good question. So I think on the advice side, the biggest bit of advice is be open, be open minded, be open to feedback, be open to being wrong, be open to new ideas. At the end of the day, you know, I will very rarely go and say this idea is not going to work. You don't have product market fit, all these kinds of things. Mainly because I'm not going to be the armchair philosopher that tells the founder how to run their business after they've put in who knows how many years into building the product, and are vastly more technical than I am, are better suited to run the company than I am. I think that the overall idea though is, as that sounding board, especially if you're in the portfolio as a partner, what we're seeing from other carriers, TPAs, brokerages, brokers, whatever it is, wherever your target market is, these are the broad trends that we're seeing. And what we've seen work in the past is, when you go to make a sale, you probably sell into IT, right? Because we're seeing a trend within large carriers today where it's less the business folks making the decision, because a lot of times the level of integration that's needed, IT has now has a bigger seat at the table because it's resource planning, right? And so, hey, have you thought about, seeking out the CIO or the head of IT, or pitching that way versus focusing only on the head of claims or whatever it is. And so I think a lot of times it's, if you're open, open to advice, open to being coached, open to, a lot of VCs have been founders in the past, and so take some advice, take some learnings, and then do with it what you will, right? It's advice at the end of the day. It's not a command.
Yeah, no, definitely. I think that's a great way to put it. Well, Raul, thanks so much for your time. Appreciate the insight.
No, thanks for having me.